Everybody knows that you can buy a home with zero down with a VA loan. But what everybody forgets is the other part of the equation, the five to ten to $15,000 in closing costs. And that's where the gap is right there. That's why your buddy with zero down loan still wired over $10,000 to the title company. So what I'm going to show you for the next few minutes is the other half of the equation, exactly where the money goes at closing and the three layers that we stack to cover every single dollar of it. So a veteran can walk into closing, sign, and walk out without writing a check. My name is Mark Deacon. I'm a mortgage broker with Barrett Financial. I spent 10 years in the Royal Canadian Air Force. I'm a former US Air Force spouse. So I've PCS, I've used the VA loan, and I've been in real estate for 12 years and helped hundreds of military families and veterans use their VA loan benefits, and almost all of them bought with zero down and zero closing costs. So first, let's give credit where credit is due, because the zero down part is absolutely real, and it's the most powerful benefit in American home finance. And the VA loan is the only product out there where you can buy a home with zero down with no mortgage insurance. So when you buy a home with the VA loan, the Department of Veterans Affairs is guaranteeing a portion of the loan for that lender. That guarantee replaces your down payment. So on a conventional loan, you're putting 5, 10, 20% down, FHA 3.5% down. But on a VA loan, it's zero, and there's no mortgage insurance either. And that on its own is going to save you hundreds of dollars per month compared to a low down payment conventional loan or FHA loan. So the promise you've heard about the zero down VA loan, it's absolutely real, and it's a benefit that you've earned. So here's the question that nobody answers. If it's zero down, why are people still bringing $10,000 to closing? And that is because the down payment is not the only bill. That's only half of the equation. So let me show you the one that they don't put in the flyers. So here's a typical $300,000 home VA home purchase before anybody structures anything. You're going to have lender fees, title, and escrow. Call about $5,500. Your prepaid, which is your first year of homeowners insurance, your property taxes go into escrow, and a little bit of prepaid interest for the rest of the month, another $4,500 or so. That's your closing costs. The one thing that is paid upfront during the process is your home inspection. Call it 500 bucks. And then there's the VA funding fee. This is rolled into the loan. So you're not going to write a check at closing, but it's added to your loan amount. It's used a first time use and subsequent uses, and it's waived if you're a disabled veteran. So if you add all of this up, that zero down home that you thought you were buying is now $10,000 out of pocket at the closing table before you get your keys. 3 to 4% of the purchase price. This is where the zero down dream dies for most military buyers, not the down payment, not the closing costs. And this is what prevents most people in the military and veterans from becoming homeowners. So here's the part that changes everything. Every single line on that chart can be covered, not waived, not rolled to the loan. The bills are real and somebody has to pay them, but they're paid by somebody that's not you. And there's three layers to this, and we stack them all in order. Layer one is going to be a seller concession. So the first thing that we do is we negotiate with the seller to cover your closing costs on your behalf. And this happens in almost all cases, especially in the market that we are in today. Layer two is lender credit. So our lender does not charge lender fees. That's going to save you over $2,000 right up front. And layer three, the realtor credit. So if you use one of our agents and the agent is not able to get all your closing costs covered between seller concessions and lender credits, they're going to give you up to 25% of their commission to cover your closing costs. Remember, this is not being rolled into the loan. You're not paying a higher interest rate. Other people are paying your closing costs for you. So let's look at this one more time. So layer one is the heavy lifter, that's seller concession. This is the ultimate goal. The VA rules allow the seller to pay all of your closing costs, lender fees, title fees, escrow charges. It's written to how loans work. On top of that, and this is the part that most loan officers forget, the seller can give you concessions up to 4% of the purchase price, and it could be used for things beyond standard closing costs. It could be used for prepaid tax and insurance. They could be used towards a VA funding fee. They can even be used to pay off debt to help you qualify, or if there's extra concessions, we can just pay off debt because it exists. On a $300,000 house, 4% is $12,000, and we rarely need all of it, so we can put that money to good uses in other places. So I know what you're thinking. No seller is agreeing to that. And here's a reframe. You're not asking for a charity, you're structuring an offer. Right now, we are in a buyer's market almost all across the country. So pricing, getting concessions negotiated is happening on almost every single deal out there. Layer number two, lender credits. And this is about as simple as it gets. Our loan team does not charge underwriting or processing fees, and that saves you over $2,000 in closing costs. If you're already under contract on the loan, or if you've been shopping, this will be box A in your loan estimate. On most lenders, they're charging underwriting, origination, processing fees that could be $4,000. On our loan estimate, box A is completely empty. We don't charge lender fees. And then this stacks. So whatever the seller concession is covered in layer one, this goes on top of it. So between those two layers alone, most of that closing cost covered and prepays are already spoken for. And we haven't even gotten to the third layer yet. Layer three is the one that almost nobody talks about and is only exclusive to our agents at the Veteran Home Advantage Network, and that's Realtor credits. So when you buy a home, the seller side's already paying your agent's commission, so you're not paying anything out of pocket there. And if you buy with one of our agent partners, and we have them all across the country, that agent will contribute up to 25% of their commission towards your closing costs if layer one and layer two, we're not able to get them all covered. It's our way of honoring your service with more than just a handshake. We're helping you buy a home with zero down and zero closing costs. So now, if you stack it, the seller's paying a chunk, the lender's covering a chunk, and your own agent's covering the rest. And that's a three-layer system. So before we run the numbers, one quick bonus that most buyers miss is your earnest deposit. Deposit you made when your offer was accepted, it was never spent, it was just parked. So if we're able to get the seller concession to cover all your closing costs as well as the lender credits, you're going to get that money back at closing. So you're truly buying a money with zero down and zero closing costs. So let's stack all three layers on the same deal and watch what happens. $300,000 home, first use VA loan. The left side is your closing costs. Down payment is zero. That's the VA guarantee. Closing costs, lender, title, escrow, 5,500, prepaid 4,500, funding fee, finance into the loan, so zero cash. Total cash needed is about $10,000. The right side, how it's covered. Seller concessions we negotiated the offer about $6,000. Our lender fee credits and waivers about $2,000. The realtor credit from our VHA partner about $2,000. That's $10,000. Every dollar accounted for. And your earnest deposit credit back to you at closing. So do at the table, zero. So these are illustrative, rounded numbers. Every deal has its own animal, but the structure is about the same. It's not big. That's the playbook, and it runs every single week. And we help hundreds of military families buy a home with exactly this strategy. So before you run off and write an offer, I do owe you the honest part because anyone who shows you only the highlight reel is selling and not advising. This doesn't work on every deal. An ultra competitive listing with six offers over asking, the seller has zero reason to concede anything. The appraisal comes in low, the whole thing gets renegotiated, or you walk. And one item still gets fronted during the process, your home inspection. That's paid before closing, and that's a check that you're going to write during the home buying process. Now, structured right, credits can reimburse at the table, but plan to have that money available up front. Now, if you can't get seller concessions to cover everything, there are other ways we can do it. For example, you could take a slightly higher interest rate in exchange for lender credit to cover your closing costs, but that's for another video in the future. So here's my rule. If a lender promises you zero out of pocket on every single deal, run. What we'll promise you this instead is we'll tell you whether your deal can be structured that way. And if it can't, we'll tell you that as well. If this has opened your eyes to what you can do with your VA loan, here's the next step. Well, two of them actually. First, grab the VA Homebuyers Playbook. I put the link in the description. And this playbook has 17 pages of content on how to use your VA loan to the maximum ability, including this strategy that we talked about in today's video. The next, book a call with my team, and we can talk about your strategy and how we can help you become a homeowner using your VA loan and get all of your closing costs covered as well and build wealth through real estate. So if you want to learn more about the VA loan and how to use it to build absolute wealth and actual wealth, subscribe to this. We'll put out a new video every single week. My name is Mark Deacon. I'm a VA loan expert. I'm a mortgage broker. We operate in almost every state. And this is the benefit that you've earned. So let's make sure that you actually get to use all of it.